If I get back to the U.S. economy for a moment, I mean, you mentioned, of course, 3.2% fourth quarter GDP, the GDP number. We had a very strong employment number out of that, but we've averaged 150 over the last 3 months.
That's correct.
Business investment, there is some concern about that. There's even some concern about consumer, depending on who you talk to in the retail industry. Are you concerned that there is something going on here in terms of a slowdown in the U.S. economy, whether it starts with business investment or even kicks over to a more concerned consumer?
Right. Well, for sure, there's a global slowdown going on, and that's something that's been remarked upon by the IMF and the World Bank. But in the U.S., the thing that I've held on to as I've refused to revise my forecast throughout the year, watching a month or two of bad data, is that income growth is still really strong. We have wage growth north of 3 for 10 months in a row, first time since 2009. And when you get income growth like that, you tend to get lots of consumption growth, and that's kind of an insurance policy against bad GDP. So I think that we had a really strong first quarter. The first quarter is usually weak. If you look at the income growth that tends to kind of move like the Queen Mary, it's something that should be a kind of insurance policy against getting down below 2 for the year. And so I think that 3 is still a pretty good sweet spot, given how strong the first quarter was and the fact that the first quarter is usually weaker.